Your favorite influencer earns 15 lakhs a month. And you know how much tax did they pay last year? Zero. And no, it's not illegal. The average Indian on a salary pays 30% tax after rent, EMI, school fees, everything. And the person posting hustle hard reels from their Bali villa pays almost nothing. And today we are going to break down exactly how India's top content creators, some with millions of followers, are legally engineering their taxes. And yes, this is not at all a conspiracy, it's a strategy. And by the end of this video, you understand better than most CAs will ever explain it to you publicly. Okay, let's first understand what is the income source of these influencers, because they don't have salary credited to their account every month, but they have other sources of income. Brand deals, AdSense, affiliate commissions, paid Instagram promotions, merchandise, digital products, courses, even equity in startups sometimes. And here's what most people don't know. In India, if you are a content creator, you can file your income as business income. Under Section 44ADA of the Income Tax Act, this is the presumptive taxation scheme. Under this, if your gross income is below 75 lakhs per year, you declare 50% of it as taxable and 50% assured to be your expense and gone legally. And this taxation system was designed for doctors and lawyers. And guess what? Influencers have been accidentally become the biggest beneficiary out of it. And no one is talking about this. And now coming to the most important trick. That is company's trick. That's where they make the most money. Okay, so the really big influencers, the one doing 5 CR to 10 CR a year, they don't even operate as individuals. They operate as private limited companies. And here's why that matters. As an individual, you could pay somewhere around 30% tax, that to income tax. But a private limited company pays only 22 to 25% corporate tax. And that's even before the deductions start. Founder's salary from their own company, deductible expense. Office rent, even if it is their apartment, deductible expense. Their phone bills, internet equipment, travel to shoot content, all deductible business expenses. Some creators go even further. They register their company in states with specific incentives. A few have even explored LLPs, which is limited liability partnerships, which carry a flat 30% tax but give you the flexibility in how you distribute those profits. And here's the most controversial take. When you see a creator book 5-star hotel, stay for a brand, collab, that entire expense, potentially, like let's say 80,000 a night, gets written off as business cost. And you on the other side would pay GST on the same hotel where you for living. And they don't. It's the same country but different reality. And now coming to my favorite subject, which is GST. Because this is where it gets really layered. Influencers registered under GST collect 18% GST from brands on their invoices, but they also pay GST on their purchases like camera, software, studio, rent, and the difference between what they collected and what they pay, they keep it or claim it. And it's called input tax credit. And here's a creator earns 10 lakh from a brand deal and they charge 18% GST, and that's probably about 1.8 lakh extra they collect. Then they buy equipments worth 5 lakh, paying 90,000 in GST themselves. They offset this. Now the net GST liability 90,000, not 1.8 lakh. Now multiply this with at least 10 to 12 brands across a year with constant equipment purchases and upgrades. And now you begin to see how the numbers shrink dramatically on paper. And here's the most weird part about it. India's GST system was designed to formalize the economy, but accidentally it created a playground for anyone smart enough to register as a business. Influencers figured this out even before the most traditional businesses did. And now coming to investment shield. And now let's talk about what top creators do with whatever taxable income remains. Because even there's a system, ATC investments, ELSS mutual funds, PPF life insurance up to 1.5 lakhs saved per year. Then ATD for health insurance and NPS contributions for an additional 50,000 deductions under ATCCD IB. And some creators have just started buying commercial property in their company's name, which then generates rental income, and that's taxed at a lower effective rate and creates depreciation write offs. A few, and I want to be very clear, this is rare. Have also have structured royalty income from their IP. If your brand name, your logo, your content format is licensed to your company by you personally and legally, that royalty income can be split and taxed differently. This is completely legal, and it's what film stars and musicians have been doing for years. And what we learned out of it, the biggest financial literacy gap isn't about investing, it's about income structure. The wealthy don't earn more and say what's left, they structure what they earn so less is taken in the first place. And every influencer understood this before you do. And now I want to talk to you directly. Is this fair? Honestly, no. A school teacher earning 6 lakhs a year pays more effective tax than a creator earning 6 crores. That's the truth. And it's a structure problem, not an individual one. But here's what I want you to take away. This system isn't just exclusive to influencers. These structures, presumptive taxation, company formation, input tax credit, ATC optimization, they all are available to any self employed Indian, freelancers, consultants, small businesses, and even side hustle earners above a certain threshold. The problem isn't the influencers are using these tools. The problem is that nobody told you these tools exist. Our school system never taught us how to earn money and pay taxes. It never teaches you how to structure your income, and that gap, that silence, is where generational wealth is actually lost. And if I go one step further, SEBI regulates market advice, GST Council regulates trade, but the creator economy as a sector that generates an estimated 2,200 crores in India in 2023 alone has almost zero regulatory on its financial structure, and that's policy failure, not a creator failure. So coming to the conclusion. So are influencers avoiding taxes? Yes. Legally? Absolutely. Unfairly? Arguably? And now here's the real question. Now that you know the game, are you going to keep paying by rules that were never meant to, designed in your favor? If you are a freelancer, creator, a consultant, or even someone with a side hustle, the next video I'm making is going to walk your way through exactly how to set up this structure for yourself. Subscribe so you don't miss it, and drop a comment. Do you think India should regulate influencers' tax structure more directly and strictly? I genuinely feel so. I genuinely would love to know what you think. and file your taxes. Just file, but smartly.